Okay, everyone, let's get right into the stock market technical analysis. I'm going to go through what I see in the charts, give you guys my thoughts, go through some individual trade ideas, and we'll go ahead and wrap up. So, some volatility this afternoon after the Fed minutes came out. Again, I think this market, for a very long time, has pretty much completely traded on the Fed, and I think it's going to continue to do so for a while. So, anytime there's any Fed meeting or Fed minutes, Fed governors talking, anything like that, expect volatility. So, triple Qs, here's what we've got. I got a couple things, and my analysis also is including the SPY because we do want to look at that as well. And you want to take them both, together. Anytime you're at any kind of support or resistance level, you want to see how both indices are doing. One, the SPY is the broad market, so it obviously includes technology. It's the broad market. But then triple Qs is the heaviest weighted sector, typically the leading edge of the market. You'll often see tech lead to the upside or the downside. So I also follow that as well. And just because it's heavily weighted within the SPY. Triple Qs is at some support. You can see here on my chart, right there at about 293, right there, we had some support right through there. It was resistance through here. They popped it above, like on a gap open, but they sold it right down, so that still counts. Couple reactions right through there, and there we are, right there at resistance. Now, the 200-day simple moving average is just below, so maybe they want to run it down and hit that. That's completely possible. But in general, we're at a decent level of support, and I would be looking for a potential bounce here on triple Qs. Now, if this gets taken out, and especially if you take out the 200-day moving average, maybe get a daily close below there, that's going to be pretty bearish, and we'll start to really incorporate that into the analysis. But for now, we're at support, so I would think there's going to be some bulls stepping in sometime today or tomorrow, buying this dip right here at this support level. Also, when I look at we can look at the futures real quick. Let's look at the NASDAQ futures. And NASDAQ futures, you can see if I scroll this out, run this line out right here, this is former resistance, and it's basically some support right through there. So it's kind of the same. That's the same look that we have on triple Qs. Now, again, the 200-day moving average just slightly below. So maybe tonight they dip down, hit the 200 and bounce off of that. It's hard to say, but I would expect there's going to be some buyers at the 200-day moving average. So the risk reward, it doesn't make sense to be heavily shorting or taking, at very minimum, taking new shorts. Doesn't make sense to take new shorts here because you're pretty much near support, and I would think there's going to be a bounce. Back to the triple Qs, because again, that's primarily what I like to trade. You'll see here, where do we bounce to? Well, here's some former reactions on this hourly chart. You can see right there, kind of ripped through there, held support. So minimum bounce, I think, is there at about 298. And then, maximum bounce maybe up to this downward trend line. We could even run up and put it in a new divergent high. That's completely possible as well. Okay, so that's the SPY. Again, I can easily see a little dip down into the 200 and then a recovery. I think that's, there's a good chance of that for sure. So, but I don't think we're going to just slice right through the 200. So we'll watch that. Let's look at the SPY, S&P 500 here. S&P 500, you'll see this is the hourly chart, but it also shows up on the daily. This is pretty much the entire rally since the October lows. You can see there we've held support all through there, and we're right at that trend line right now. So they're going to chop it around and maybe do a little false breakdown, kind of a bear trap, but I would think we bounce here. So yeah, that's really it. We're at support, and then maximum or minimum bounce right up here, 404.75. Potentially bounce all the way up to this downtrend line all the way up here. Maybe pop over and do a divergent high on the daily. I don't know. But, these are kind of my targets right now. Minimum bounce. And for now, I'm going to say that's probably maximum bounce. We'll see what happens when we get there. I would think at least you'd get a pullback. So that's what I'm looking at there. It's not objective to be short right now. Not at this level, okay? It's at support. So if I go to the daily, you can see here, and it's actually dual support pretty much. Here's your downtrend line coming off the December 2021 highs. So this is your bear market, all right? And I've marked that out a bunch in a lot of my videos. And look, that support level's right there. So, you broke out of that trend line. We've come in for a back test. This is where the bulls are going to step in at, all right? Dual support on the SPY. Doesn't make sense to be short. Now, if we break through this, break through and get a daily close down back with underneath this trend line, then yeah, that's very bearish. But until that happens, we're at major support. And here's the S&P 500 futures, the ES. You can see coming off pretty much those lows back in October. Well, these really start in December. You've got support all through here, multiple reactions, and as we come in, looks like we're going to dip there either today into the close or slightly in the after hours. So I think we're going to be at pretty solid support very, very soon, and we should get that bounce. I think we're going to have some sort of a rally here. Minimum bounce target on that one is about 4,061 up to potentially 4,150 or so. All right, let's look at gold, because gold and really the gold miners are probably one of my favorite long trades right now. So on gold, this is gold bullion. I've got major support right down here at about 1805. You can see looks like we're going to head down there and hit that. So maybe a little more downside in the actual metal, down another 1% or so to that major support level. When I flip over to the futures, again, we're into that support zone. I kind of have been talking about that. So anywhere from here down to about 1823 or so in the gold futures, which again is just slightly below. That's another, 0.5% roughly. So that's close enough from my perspective. You always want to step in a little early. So I'm building long positions now, and I'm really doing it in the miners. So let's flip over to the miners, GDX. You can see here in the gold miners, very same setup, support right there at about 2730. You can see that was a former reaction high. We had a gap right here. We also held support all the way through here, and we've corrected after rallying. We've had a nice long correction down to that major support level. Slightly below the 200-day moving average, but again, that looks to me like it's going to be kind of a whipsaw. Newmont Mining is reporting, I believe, after the hours today. So that's the largest gold miner. The way the chart looks right now, I'd have to say the earnings are going to they're going to buy it up. All right, so this is at support, and it looks good to me. And then also, if I go down to the hourly chart, you can see we've got some bullish divergence here on the momentum indicators, still hanging on to that, kind of just barely, but still hanging on. And again, I think they'll hang on to it into the earnings. Then when you look at Newmont, the largest miner, if I go down to the daily chart here, nice support right where we're at. Basically, we're kind of below it. It's about 44.50, but basically I've kind of marked that out. All these reactions where we've had either where it's held as support or resistance. Okay, there's a gap right there, and then there we are right at it. Okay, so we're right at support. We're just slightly under it, and it's right ahead of earnings. This tells me that we're likely going to rally after earnings. Looking at the hourly chart on Newmont, clear bullish divergence. So yeah, this is a good setup. I like it as a long. If you don't, if you want to wait till after earnings, obviously, I probably won't get the video out before then, but that's what I like about it. Private member group, I've already told this about. So guys, if you haven't joined up in the private member group, feel free to join. Link in the description below. I'm really just kind of throwing out additional trade ideas, giving you additional charts. I'm not recommending anything. I just say, hey, here's a chart. This is a setup. It's objective to buy or it's objective to short. Here's the technical reason why. And then you do what you want with it. So that's kind of a lot of it. Okay, so I've made a bullish case for gold and the gold miners. I like them long. I think they're a good setup. And that is really how I'm looking to play that. So, all right, commodities, wheat. Okay, wheat is at support. You can see here on the daily chart, we have a kind of a big bullish falling wedge pattern. We did break out. That breakout did come with big bullish divergence on the daily. So very bullish setup. We broke out and we came in for a back test. All right. I thought sometimes when you break out, you just run. Sometimes you back test. And yeah, that's what this is doing. So that's an objective long. That's an objective buy right there. I did add to some of my wheat position, and I expect that we rally from here. Now, it doesn't have to bounce just tomorrow, but I suspect we don't really, maybe we hang out here for a couple days, but I think that most of the downside is in, and we're going to rally from here up to, at least up to 833 and probably quite a bit higher, to be honest. So I like that as an objective long. Okay, I'll run through some individual trade ideas, guys. I'm seeing across the board, it looks like we're going to get a little bit of a bounce. Even here, JPM, you can see bigger picture. And again, it's important to define your time frame, your trade, your trading style, and the time frame. Bigger picture, I think JP Morgan's going lower over time, but we're not going to just crash straight down. So I'm trying to give you guys an idea of maybe where the bounces might be at. If you don't really care about that and you want to just trade the bigger picture, then I think you just, set your stop loss and then let the trade kind of work itself out and ride out the bumps. However, this is what I see, so I just want to point it out. On JPM, obviously I think we're heading down here to 129, but I think we're about to get a little bounce, maybe a 1 or 2 day bounce. And you can see here, this is former resistance right there, and it was former support. So see, resistance, had some reactions right through here on the daily, and there we are right there at support. So again, I think we're probably going to get a bounce. How far the bounce goes, I'll use SPY and triple Qs to be my guide most likely. Could bounce up to this 141 area. So that's what I see there, and I'm seeing that across the board. Even, I'm taking a second guess on this cat one because I did just point out to the private member group, I think my trend line was maybe off. I had it all the way up here, and this looked like a sell signal, but see, the SPY and everything else is at support, so it makes me question that this is going to just break down while the major indices are at support. So I moved the trend line down a little bit, and you can see we're basically at support there. So I'm going to pull that one, guys. I'm going to go ahead and close that out, that short, because I think we're at support. Now, bigger picture, I think we're heading a lot lower. I think we're going to come down and fill this gap at 200. But, right here, I'm just expecting a bounce. So we bounce, we probably take some profit. If you're long or whatever you're choosing to do, then, take the profit on the bounce, load back up on shorts for the next push lower. Or if you don't want to worry about all that and you just want to ride out the larger trend, then, just ride out the bounces. Okay, Starbucks. You can see Starbucks again. We are at support. All right, this is former resistance. It was also former support here, and there we are. We're there again. So with Starbucks at support, the S&P 500 at support, it just doesn't make sense to stay short on this one. Now, if we break support in the S&P 500, the triple Qs, and a lot of these other things, that's going to be a major sell signal, and at that point, it will make sense to be, probably fully loaded up on shorts, but that's not the case right now. We're closing the day at support, so I'm no longer short on this one. We'll look for a bounce and probably reshort it on the bounce. And Tesla. So Tesla, I don't know. As far as I can tell, maybe it's going to rally up and hit this 200-day moving average right here. If everything else is going to bounce, Tesla can bounce more, and it's probably going to do that. If it does that, it'll put in a divergent high, most likely, and we'll have negative divergence on the daily, and that will set us up for a much better short over the longer term. So that's the way I'm leaning right now, guys. I'm leaning on that bounce, a small bounce, medium-sized bounce, and then we'll look to reload up on shorts on a lot of these individual trades after that. So I'm currently long some of these gold miners. They look pretty decent. I have a mild long position on the SPY and the triple Qs, and that's about it. Oh, and wheat. I have some wheat and some nat gas. Let's look at nat gas. So nat gas is the widowmaker. It doesn't want to really gain any traction, but here's the daily chart on this one, and I do like that candle. That's a potential bottoming candle. That's a doji. I don't know what the Firefly doji or something. What we look for is you look for confirmation, which is another candle of buying. So big green candle, the better. But it's we're looking for another up day basically in nat gas, and if you get that, then I think that's the bottoming pattern. And the way you trade it is you just set your stops kind of below that. You don't really want to see the chart go back below the low of that day. So stop down there. And yeah, and this would be a bottoming pattern, and it's a major bottoming pattern, which means we could rally for quite a while. So I like that on that one. And then if I look at this other one, this one, you know, in general, what I can tell from this one is on the daily, you've got this downtrend. We broke trend and we were back testing. So you broke trend, came in for a back test, and we're back testing right now. Bullish divergence on the daily. So in general, that's a bullish setup. And then UNG is the ETF. This one, you know, we have bullish divergence right here on the daily. Okay. So again, we started to build that yesterday or the last couple days, and we still have it. So looks good. Now today they rallied it into the first level of resistance. Didn't quite get there, but got close. And then they stepped in and sold it. But I think we have the makings of an uptrend. Okay. So what I want to see now is more buying. All right. Again, I'm looking for more buying really starting tomorrow. And if we don't get that, then maybe something's, you know, then my analysis on it's wrong and we're just wrong and we'll want to exit. But what I think we do is probably rally up to 810, break through that, rally straight up to 887, probably get a pullback there, maybe back down to 810, and then continue to rally from there. So that's what I'm looking for in nat gas. Okay, the market just closed. So I'm going to get the video out. There should be some time in the after hours, or, you know, maybe if you're not positioned, but explained how I'm positioned. So best of luck, guys. Catch you on the next one.